Hello everyone, welcome back to my channel. So this video marks the beginning of week number 40 in this road to 100k realized return challenge. And well, the markets have been going down for most of the day, but the second half of the trading day they have been staging a comeback, as you can see here. I would say that most likely this is because of earnings. Even though today is probably the least relevant day in terms of earnings this week, there are almost 200 companies reporting their first quarter earnings this week. And yeah, we have still the big tech companies' earnings yet to come. But markets have been turning around, and at this moment, um, they have basically offset most of the losses by now. And so we have to wait and see what happens the next few days. For the time being, this is already my third third call, the third set of calls that we sold. Basically, what happened, and looking here at the number of trades, basically we started by selling three calls at 480. These were eventually bought back at 1 cent because they were almost worthless by this point. But then, because the market continued to pull back, this call that we sold, these calls that we sold here at 473, began to become closer and closer to being in the money, and eventually we were stopped out. We were basically evicted or uh, of the trade because the calls were called back at the stop loss. I set the stop loss at 30 cents, and eventually they were bought at 33. So we are still on a slight loss here. And now at this moment, as soon as these were bought back, given the loss that we had and given the fact that the market appeared to have stalled its recovery a little bit, I decided to go ahead and sell some more calls here at a slightly higher strike price. Even though if this call expire worthless and we keep the entirety of the premium for us, we will still be losing for the day, but it's going to be a much smaller amount. Currently, our realized profit and loss is about $35. If this call expire worthless, it will bring our losses at about 16-17 dollars. So yeah, it could be better, but I felt that at this moment, and looking here at the option chain, the premiums are pretty much compressed at this point. They are much lower than they used to be, even late in the last week. And so uh, probably, not probably, most likely because of the implied volatility has come down. But even so, I would say that given what already happened on this particular trading day, the value of the options are not reflecting this implied volatility at all, because the market basically staged a completely almost a complete turnaround, because at this point it was falling by more than 1%, and of course at this point is almost even. But it is the way it is, and keep in mind that, and this is the main point that I want to emphasize in here, all of these trades were done when we entered those trades. The probability of profit, meaning these calls expiring worthless, was over 90%. So we are expected to win these trades more than 9 out of 10 times. But every once in a while these things happen, but I'm not concerned about it. The most important thing, as I mentioned before, is to avoid those big losses. And as long as we manage to avoid those big losses, the fact that we are doing such high probability of success trades, eventually we will be able to recoup the losses. Now on to Pfizer. Interesting case. At some point in the day, it was climbing by more than 1%. So again, it was another high volatility day for the stock here. But nonetheless, the most of the gains were offset by this point. And as you can see here, there are no calls, there are no puts. So, and the reason for this is because tomorrow Pfizer is going to announce its earnings, and as things stands at the moment, the market is expecting that the earnings is going to be lower than in the previous quarter, and that's why some additional volatility may occur in the stock, and that's why we are basically waiting to see what happens. And because if the stock goes down and if we have puts already, we may be able to we for sure will be called if the move is, if the swing, the price swing is significant. So I would prefer to have the puts in place after the earnings are released, so that we can probably buy the shares at a smaller at a lower price. And the reason I did not sell calls is because we can only sell calls at a lower price than the one we want to sell the shares, and so we cannot put the strike price of those calls too much higher than the current price. And so if only a big upswing is enough for those calls to be in the money, and this would lead to a large loss. So the plan now is to play it safe, and tomorrow we will input those trades, those calls and those puts on Pfizer, but only after the market reacts to this situation, to the earnings themselves. So for the time being, this is all. And we will wait and see what happens also with this trade. This option is almost at 1 cent. I input also an order to close the trade, as you can see here. As soon as it reaches 1 cent, these calls will be bought back. So yeah, we'll wait and see eventually what happens. For the time being, this is all. Feel free to leave your comments in the comment section below. Any questions you may have, you may also send me a DM on LinkedIn. And of course, feel free to like the video and subscribe to the channel. And we'll reconvene at the end of the week to see how the trades went. And yeah, I'll see you there.